This is the Retirement Mentality. If this is your first time here, thank you for coming by. And if you've been here before, thank you very much for coming back. Today, I want to talk about what we need to do as investors. Should you have your money in cash? Should you have your money in the stock market? Should you be getting out of the stock market, into the stock market, into real estate, out of real estate? We are in uncharted territory here. YouTube wouldn't even let you say the word coronavirus. They were going to demonetize your videos. But I'm in this wonderful, unique situation where I'm not making any money on my videos anyways because I don't have enough subscribers. So you can help me remedy that. Tell your friends, hit that subscribe button. Let's get this pushed out. Maybe this will be the video that will just have floods of people coming to here to subscribe to my channel. We can hope, right? So what should we be doing with our money right now? Are there going to be more opportunities in the stock market right now? Are there going to be more opportunities in the real estate market? You know, like I said, should we just be selling everything and hoarding the money and keeping it under our mattress? Let's get into it. Let's talk about some of those aspects and let's see what we can figure out. Here we go. Like I said, I am a real estate investor. That's where all of my money is at. I have 7 properties. I have 3 vacation rentals. I have 3 long-term rentals, and I have 1 house that's actually vacant right now that I just bought in Puerto Rico that I'm getting ready to remodel it. So it's just sitting there empty. But as any good investor, you need to be able to identify opportunities. And I think as bad as this pandemic is right now, I think it's creating opportunities for investing. I don't know if it's going to create more opportunities in the stock market or in the real estate market, or, you know, we also have to think about how long this thing could last and how much cash we need on hand to survive this thing. So like for myself, like I said, I have 7 properties, 6 mortgages. Each mortgage is roughly about $1,000 per month. So if this thing goes on for 3 months, 3 times 6, that's $18,000 I need to have in reserves to pay my mortgage payments. I'm living in St. Thomas right now and I'm renting a place. So I have another $2,500 a month rent that I have on top of that. So that's another $7,500. What did I say before? 18,000 plus 7,500, 16, 20, $24,000 roughly I'm going to need if this lasts for 3 months. But if it lasts for 6 months, I need $50K in the bank just to cover my mortgages and my rent. That doesn't include food and eating and car insurance and gas if we're even allowed to leave our homes or whatever else we need to buy for the zombie apocalypse. So that's one thing to consider, is how much cash you might need on hand to get through a situation like this. And luckily for me, right now, I'm actually flush with cash. I have enough to get through 6 months of this with no problem. I don't want to have to eat through all of my savings, but I've been smart. I went broke in the recession in 2008, so I learned a lot of important lessons from that. This could be as bad, it could be worse. I don't think it's going to affect all areas the same, but with 3.5 million people going on unemployment this week, this is going to have some long-term effects, and we need to think where we need to have our cash. We always have to think about the worst case scenario. So for me, my worst case scenario would be if my long-term renters weren't paying their rent and all of my vacation rentals sat empty for this entire time, and I made no money as a real estate agent, which I'm pretty sure I'm not going to make any money as a real estate agent for a little while. And time will tell what's going to happen with the vacation rentals. I actually have a few people, mine are all in a beach town in Florida. And so there's a lot of high-rise condo buildings. So I do actually have some people calling to rent my single family houses because they want to get out of the condo and the germ situation and the elevator buttons and the pool and the people in close proximity. So that was something I didn't see coming. So I have at least 2 of my properties rented for at least 1 month. They could go longer. So that is taking some of the edge and fear off of me. But the fear, that's what's driving all of the markets right now. The fear of the unknown is what everyone is afraid of. So that's why the stock market is tanking right now. That's why there's 3.5 million people on unemployment. That's why nobody knows where the hell to put their money. So we're all kind of in the same boat here. And in that same sort of topic about fear and the unknown, like myself, like I said, I have some cash right now. I'm lucky that I did save up for a rainy day, and now the rainy day's here. But I have some extra cash that I need to put somewhere. They've been telling us that this recession was coming for 3 years at least. They kept saying, we're due for a recession. We're due for a recession. We're 10 years into a 7-year cycle. So I've been waiting for this chance to put some of my money and finally get into the stock market, because I haven't been into the stock market at all. Every penny that I make goes into a savings account just to buy the next property. So I finally feel like this is the time for me to dip my toe in and get into the stock market. But because I'm a real estate investor, I don't really know what to do, where to go, where to put my money into. So I've just kind of been looking into the index funds and the ETFs and that sort of thing. Let's finish talking about cash here before we move on to the other aspects. So you got to figure out what your worst case scenario is if you have rental properties or just your own rent or your own mortgage, and if you have a family, and what expenses you have if you have medical bills or car payments, or you need to be able to try to get through this with getting all your bills paid and surviving. So figure out what that cash number is, and then if there's anything left over, that's what we can talk about for the stocks and the real estate investing. My problem is, even though I knew that this recession was coming eventually, and we've known it's been coming for years, I wasn't smart enough to spend the last 3 years to spend an hour a day or an hour a week or an hour a month or whatever amount of time into really studying and learning the stock market and being ready for this when it happens. It's been too long since I've looked at it to remember PE ratios and comparing dividend to growth stocks. My plan was to just stick to the index funds, the ETFs, that sort of thing. Those historically have good returns around 8, 10, 12%. And they're all at a discount right now. So my plan, which was the smart plan, was to just dollar cost average and buy in as the stock market was going down. That's the logical, smart thing that we all should have done. But then I started asking my stock investing buddies, what should I do? When should I get in? Trying to time the market. And they were telling me to wait. It's going to get worse. This thing's going to drag on forever. So I think I actually, as of right now, I missed the dip. That was last week. It went down when the stock market was at about 18,500. That was, I thought, in the 18s was my trigger point. And I listened to these other people who knew more than me. So I waited to get in, and I think we're up about 10% from where we were at that point. So I missed, as of now, the dip. They're telling me it's going to go back down again. We'll see. Time will tell. But me being the frugal, cheap ass that I am, it's hard for me to come in now and pay 10% more today than I could have last week when I knew I should have gotten my money in there. But anyway, move on. I did put money in today that was back down again today. Today's Friday. Yesterday, the unemployment numbers came out, and they should have just really tanked the market yesterday, but they also had the stimulus package that I think leveled it out. So we'll see how all of this ends up in the end. I'll show you a couple clips. I did record myself on my phone doing my first couple little trades that I did here. I downloaded the Webull app because a lot of these guys that I've been listening to on the YouTube say go onto the Webull and use their link, and then you get 2 free stocks, which now I have a link down below. If you use my link, you get 2 free stocks on the Webull. I've already received my free stocks, which was kind of fun to watch them as the market goes up and down. I think you just have to put $100 in your account. But it's a good time, even if you don't know what you're doing, to put a little bit of money in and play with the stock market a little bit and watch it. And if you've got a little bit of skin in the game, it'll kind of force you to spend a little bit more time and do a little bit more research. So that's kind of where I'm at right now. And I'll show you some of my little clips here of where I started investing. So now my problem is that I have this handy dandy Webull app on my phone, and I can watch the stocks go up and down. And I'm seeing Tesla up 75 today and down 50 tomorrow, and Google's here and Apple's there, and all these stocks are going all over the place. I just think I'm so smart, and I can just, with no training or studying or research, that I can just automatically become a day trader. And I think I can watch this stock on an upward trend. I can hop in here and put in X number of dollars and then wait till I make $100 or $200 for the day, and then hop out and be this savvy day trader that's getting in and out while they're on an upward trend. And if it starts to come back down, I just get out and take my little $20, $30, $50 profit before I lose. But if you read anything about day trading, it talks about how hard it is and how you're guaranteed you're going to lose some money. And that has proven true for me so far. I've tried it twice. The first stock I invested in was like 39 cents a share. I hopped in, bought 1,000 shares. I was like, I just needed to go up till from 40 to 60 cents. I'll make $200 and I'll just hop out. And I bought that last Friday, and today is Friday, the next following Friday. And I still own the stock that I thought I would have for an afternoon. And I'm down about 30% on that right now. So I put 400 in and now I have about 300. So I'm down about $100. Okay, let's talk about real estate for a minute. My expertise. So something I haven't heard a lot of people talking about is how commercial real estate could be affected by this. I think, everybody's been sent home, and if your employer thinks there's a way for you to work from home, you're telecommuting right now. They're keeping you working, they're keeping you getting paid, you're working from home, and you're happy to have whatever you're getting right now. But I think these employers are going to look at this, and if it's working, it could be cheaper for their bottom line to keep telecommuters telecommuting. So, by the way, Zoom is a stock to be watching right now because everybody who's telecommuting is on Zoom. All the teachers, my wife's a teacher, she's on Zoom. Every teacher I know is using that platform right now. So watch that stock. It's already jumped up a lot, but I digress. Anyway, so I would keep your eye on the commercial real estate market. If a lot of these offices with tons of workers can send half the workforce home to telecommute, and they realize that they can save a ton of money doing so, they may be looking to downsize their commercial buildings, and there might be a lot of commercial real estate coming onto the market for rent or for sale. So that could be an industry disruptor. We all know that, the industries are susceptible to these type of disruptors now. Ask the Yellow Pages how they're doing, or ask a taxi driver if Uber had any effect on them. So that'd be the one segment that I really think could be affected. As far as single family houses, I think it'll be less of an impact there. The only place I see that being affected is people like myself, people that have several vacation rental properties. This was pretty scary when I thought I was going to have no income coming in from those. And I know, like, as a real estate agent, a lot of the people that I sell second homes or vacation homes to, or condos at the beach, a lot of these people, they may not be buying them to make a ton of money on them, or to make, like I do, to try to live off the income from my rental properties. A lot of these people, they just want to have a beach house, and they need to rent it to offset the cost of the mortgage and the HOA fees and the taxes and the insurance and everything else. And they never would buy them if they didn't think they could make some money on the side to just help offset those costs. So this could be scaring a lot of those people too, that are wondering how I'm going to make the payment on my house, on my car, on my other car, on my kids' college tuition, and this vacation house that I thought was going to pay for itself, and I was going to have this free house because I was renting it. So those people could be getting scared. That's the fear-based section of the real estate market that I could see having some people putting their properties on the market because they're scared of what's going to happen, or that this black swan event was something nobody ever saw coming. We all know hurricanes can come and there's other things, but we have insurance for those type of things. And this is just something where things are just sitting empty right now. So that's where I could see some deals coming on the market. If you're looking for a deal, I would be looking in towns with a lot of short-term vacation rentals. Otherwise, I think for the rest of the country or the world, in normal places, there's just not a lot of affordable housing for people anymore, and there's very little inventory everywhere. So even if some people are scared of what's going on and they have one or two rental properties and they decide to throw them on in most areas, there's still just too much demand, and prices could come down a smidge and they would just be gobbled up by all the buyers who are out there looking for something. So I don't think the normal single family housing is going to be affected very much by this. So I'll recap a little bit and go back over cash, stocks, and real estate. So cash. This is the event. Some people say you need 1 or 2 or 3 months of emergency funds. Some people say you need 6 to 12 months. This is the example that everybody said worst case scenario. I mean, nobody knows what's happening. Nobody knows how much money you're going to need. Nobody knows if this is going to be 1 month or 3 months or 6 months. So having 6 months of cash available to pay your bills, this is proof that that is a good idea. And I'm not a proponent of that you need all 6 months cash in the bank. I think you can use some credit for some of that. So if you have a HELOC, line of credit on your house, personal lines of credit, credit cards, that can bridge the gap. If you have 2 or 3 months of cash and then 2 or 3 months more you could put onto a HELOC or something, you definitely need some cash in the bank. But I don't think, like, myself, for instance, I need $50,000-$60,000 to get through 6 months of just paying my mortgage payments. And that's a lot of money to have sitting in the bank earning nothing. So I have line of credit on my personal house, and I have some other lines of credit available to me. So I don't necessarily think I need $60K cash in the bank at all times. So you can bridge that gap with credit. I'm okay with that. But this is also a good time for those of you who are stuck at home and learning that your only hobbies are going out to eat and spending money, that maybe you could tighten up the belt a little bit, rein in the spending, be a little more frugal. Like, after this is over, probably everybody's going to want to go out and eat out every night for the next month. But that's a huge expense in people's budgets. We could eat out a little bit less. We can drive cheaper cars. It's hard to tell people to spend a little bit more time at home after they're stuck at home right now. But there's ways you can save money and be a little bit more frugal. And this is definitely a time to look at that and try to rein your budget in a little bit. As far as investing in the stock market, if you've got that emergency fund covered and you've got extra money in the bank, this is a great time to invest in the stock market. If you don't know what you're doing, get a financial advisor, get a stockbroker, find somebody who does. It's always good, I think, to hire professionals to help us. We can't be experts at everything. So look into that, but it is a great time to get in. And just look at the funds, the index funds, the ETFs, those sort of things. They're safer bets. They're a conglomeration of stocks. Don't try to just pick Carnival or Zoom or Ford Motor, one of these companies that we think are going to go up or down based on the coronavirus. If you don't know what you're doing, that's a lot riskier. But stick to the funds, get some money into the market. This is a great time for that. And as far as real estate investing, I would sit tight a little bit right now. You could start looking for some good deals. Like I say, especially in markets with short-term rentals where there's a lot of short-term rentals. Other than that, I don't see a big effect or a lot of deals coming onto the market for real estate myself. I didn't listen to a lot of people's coronavirus prediction YouTube videos because I don't want to parrot what somebody else has to say, but I did listen to a couple just to see what other people were saying. And most of the real estate guys out there are saying, oh my God, the sky's falling and there's going to be deals everywhere. I hope you saved up for a rainy day. And I tend not to agree with that. Maybe if you're looking, like say the commercial side of things, I think could be affected more than the single family side, but I don't see a ton of deals coming on the market because of this. I think this incident, the coronavirus thing, is going to be more like a 9/11 as far as I don't mean to compare horrible things in our history, but from an economic standpoint, I think they're going to be a little bit more comparable. If you look at what the stock market did during 9/11, I think that's probably more comparable to what's going to happen here. Things are probably going to come back a little quicker. But those are my thoughts on this. I would love to continue the conversation. Leave some comments down below. I'd love to hear what you think. I'm sure all of you think I'm totally wrong. We'll be more than happy to tell me why. Go ahead and do it. I love to hear it. If you agree with me, I also would love to hear that. Or if you have questions, I'll try to answer any comments that you guys have. And as always, if you found value in this, please hit the like button. And if you haven't subscribed, please subscribe. If you think somebody else might benefit this, share it with them. I appreciate you guys' time and coming by here. And I got another video coming out. My next one is going to be about short-term rentals. I'm going to dive a little bit deeper into short-term rentals and Airbnb and some ideas I have on how you can market them a little bit better. So thank you very much.